Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I've bidden a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Wednesday edition of Benzinga's PreMarket Prep. Spencer Israel, Joel Elconin, Dennis Dick. Man, the analysts are busy ahead of earnings season. Earnings season is like around the corner here, and the analysts are getting all their calls in. Ahead of that, we got a number of interesting ratings today to discuss. We also have earnings from Delta Airlines and Levi Strauss. We're going to talk about valuations. We'll take your questions from our chats, both on YouTube and premarket.benzinga.com. And our guest today will be Ian Weiner, an advisor at Drexel Hamilton. He will join the show in about a half hour at 8:35. Joel, what is the word here overnight?
The word is here is I'm having some problems with my quotes, but before my quotes came down, there we go. We got some quotes here. S&P futures are trading in the green by 6 handles here, 26.88, knocking on the door of the intraday high from yesterday. We did take that out, 28.91. Big level of clear on the upside, folks, 2,900. That's all I need to say. Friday, Monday, and Tuesday's high. Crude in the green by 40 cents at 64.38. Bouncy day yesterday in crude, but will not give it back. Keeping an eye on yesterday's high, I believe 64.78. Silver and gold are kind of mixed here. Some stocks trading up, some stocks traded down. I did notice Bitcoin is trading over 5,000 and 5,200, so that's holding the $5,000 level. Triple D, how you doing this morning?
Problems with Skype, so you're not going to get a camera for me today. Some days Skype just decides it doesn't like my camera. I've unplugged it. The Skype message is giving me, we cannot connect to your selected camera. Please select a different camera or try restarting Skype. Well, we tried restarting Skype. That didn't work. We don't have another camera to go with, so we'll have to troubleshoot it at another date. So sorry you're not going to get any video of me here this morning, but we have the charts. We have video. You know what? I was having a bad hair day anyway, so maybe it's a good thing. You don't have to look at my hair here. So moving on, though, to more important things, and more important things being a couple earnings reports here that are of interest. The big one from last night is Levi. It's the first earnings report since their IPO there just a few days ago, so obviously, or a couple of weeks ago. So quick earnings report for LEVI, and they are liking it. Give us the results, Spencer. I'm going to break it down, just the trading action in this last night.
Q1 EPS 37 cents versus a 5-cent loss on a year-over-year basis. Sales of 1.43 versus 1.34 billion dollars again year-over-year. So year-over-year improvements. Big improvement for the EPS and slight improvement for the sales. The guidance that they gave for the fiscal year, they said their EBIT margin will be flat to slightly up, and their sales growth would be in the mid-single-digit range.
So the stock hung out here for a while, and it was just hanging out in the low 22s. And the market, it was kind of wishy-washy. It went up, and then it came back in. It was actually down a little bit. You can show this on the chart, Joel, in the after-hours action there. Just kind of hanging out in the 22 area there for, I don't know, a good 20 minutes after the results. And then CNBC Fast Money brings on, they call him the Dean of Valuation, who actually is excellent. I followed him a little bit there too. And Joel, you're doing a lot of fun things in the background. I can hear all kinds of chimes. But Aswith Damodaran from New York University, I believe is where he's at the Stern School of Business. He does obviously finance there, and he broke down on CNBC Fast Money. They were talking about the Lyft IPO, and they were talking about the LEVI IPO. And he thought that Lyft was worth $59, so that's obviously below the price. But on LEVI, he thought this was worth $27. So sometimes you get a stock that actually, when it's got okay earnings and it's just kind of hanging out 30, 40 cents, it's almost looking for direction. It's looking for like a vote of confidence or somebody to say something.
Oh, no. Dennis. We just lost Dennis, folks. Hold on one second. Let me he may have lost his internet. I'm not sure. Let me see if I can grab him back. He was just getting to the swing of things here this morning. But Dennis and Joel, for once, I'm the one with no.
I'm back.
Okay.
I have no idea what's happening here this morning, but this is Skype, and this is why I tell you, man, Microsoft, I say it all the time on the show, fix Skype.
It's okay. All right.
Because it's a good product, but man, it's got bugs.
All right, we got
and this
you.
new Skype has just, and Joel's having problems with the new Skype too. The new Skype version, too many bugs. It doesn't like my camera now, just drops a call. So anyways, I'm back here. I don't know where I got cut off. Was I talking about the dean evaluation when I got cut off, Spencer?
Yes, you were.
Okay. So he comes on CNBC Fast Money, gives it $27. He says it's worth 27 bucks. And as soon as he started talking like that, the stock started blasting off. It was thick too. It was like 2230s. I was like, is it gonna be able to chew through 10,000 shares at 35? Oh yeah, chews through those. Another 10,040. Chews through those. 2250 had another like 20,000 shares. Choose through those. And Pete Najarian gets on and he says, I like the call there too. And it's his like last trade of the day or whatever as the show's ending. And that kickstarts it even more. And it continues to take off. And obviously now we're looking up at 2350. So the bulk of this rally, you can thank the dean evaluation for, because it was looking for direction before he came on. And when he came on and said it's worth 27 bucks, they just started buying a hand over fist and they never stopped buying. And they're still buying it here this morning. So now the stock is up over $1.30 from where the professor came on CNBC Fast Money and obviously talked bullish on the stock. And we're looking at 2360. So it's important to follow, you know, the TV people who are coming on TV, especially when you get a university professor who's well followed. He's over 100,000 Twitter followers. He says something good about it at good timing. I mean, on the day where it just had earnings and the stock is kind of looking for direction, it can really blast off. And that's what we saw last night with LEVI. So love Fast Money, hate Fast Money, CNBC, love it or hate it. You got to respect it because it can move stocks, and it moved this stock last night.
Joel, any update?
Am I still here?
What's his real name?
We're talking Aswith, and I'm
Yeah, you called him the D. Okay.
Yeah, Damodaren.
Damodaren.
Okay. And
I watched him. He's excellent. I've actually read some of his stuff and his work. He really, you know, he's like old school. Sits there like CFA style, like crunching numbers, pulling it all out to come up with these numbers. So, you know, he knows his stuff. Now, not saying he's going to be correct, because we know in the long run, or it seems even the short, especially in the short run, but sometimes in the long run, that valuation and price can obviously deviate significantly from each other. But he's using old school metrics and maybe some of his own little spin on it to come up with prices for stocks, and came up with $59 for Lyft and $27 for LEVI. The Lyft sold off a little bit on his commentary, but Lyft wasn't looking for direction last night. Lyft was just sitting there, obviously, and there's not going to be as much trading action. Everybody's trading LEVI on the earnings. So all of a sudden you get, you know, somebody on, you know, CNBC Fast Money coming out and saying this thing's worth 27 bucks. They're going to start buying it. So this is a lot more players in there to act on something that they see on CNBC.
This is pretty easy, technically. The lows, I mean, it got down to 21.24, but that was a few days ago. Let's just see what happens at 24.19. That is the all-time high. It hit that a few days after the IPO. So anybody stuck in this thing since the IPO, there's your bogey. 23.78 is your current high, hanging out at 23.65. So there, one number only, 24.19. Don't know where to buy this thing on a pullback.
Also reporting earnings here to this morning. We'll go and let's go to Delta, DAL. That is trading up $1.50 here in the pre-market. So they must have said something good here. It has been running, and some of these airlines have been running for the last couple of weeks. None more than Delta. I mean, a week and a half ago, this was 50 bucks. Went out at 56.95. Looks like it's going up to 58.95. What a move here. I mean, you could almost challenge $60. So took 3 months to basically, or I guess it didn't take that much back in December, but it's been hanging out here for a long time, and it looks like it's getting all the December losses back.
The headline numbers were good. Q1 adjusted EPS of 96 cents versus an 89-cent estimate. Sales also beat slightly, 10.4 versus $10.39 billion. The guidance that they gave for the second quarter was in line with the estimate. The estimate was pretty much exactly in the midpoint in the range that they provided. So inline guidance and an EPS beat and sales beat for the Q1.
Stock trading up $1.50 in the pre-market here. I think you got room to 60. I feel like, I don't know, like sometimes these things can have some gap and goes here, but it's ran a lot already. And if you look at all the tops, just go out to the monthly chart. lots of highs just over the $60 area. So I feel like you maybe got 2 points upside, but you look at a risk reward perspective here, it doesn't look nearly as good as it did maybe, a week and a half ago when the thing was $50.
Yeah, what a move here. 58.80 marks your pre-market high, so you definitely want to follow through that level. On the daily charts here, I do see a high at 59.19. So let's see if the sellers gang up there in the 59 handle. 59.19. I don't see anything at 60 even. That's on the dailies. That doesn't mean there's not any orders there. But the major resistance, if they can really juice this thing, and I don't think they're going to get this up to 61.32. You had a high at 61.07, then a high at 61.32. This is back in December. That would be a really big move. But first things first, let's take out the pre-market high, 58.80, and then take out that 59.16 high.
There was some other news for the airlines last night, and that is JetBlue is looking to go overseas here now. So it was announced last night, JBLU. Do you have the official press release there, Spencer? What everybody's talking about here? Because JetBlue's getting a nice lift on this.
Well, I have that, but they also had some data this morning. They gave their RPMs for March and their ASMs. So their RPMs for March, revenue per mile up about 8% year over year. Available seat miles up 12.6% year over year. And that's on top of the PR, which, like you mentioned last night, which said that they are looking to expand overseas.
Yeah, could announce a service across the Atlantic. I don't think it's official yet here, but that's what the rumor has, that they're going to be going overseas. I mean, it's that competition for like your Deltas, your American Airlines, the ones that obviously, I think Southwest has a lot of domestic operations. Might be something to think about though, just if there's going to be some competition there. I don't know if it's a big deal, if JetBlue is really seen as huge competition for them, but I mean, if I know Delta is huge going over the Atlantic there. I've always enjoyed actually flying Delta if I do go across the pond. But what are your thoughts here, Joel? I mean, you see Delta trading up here on the earnings. There's a little bit of competition potentially coming from JetBlue.
Yeah, I mean, it's like not official, right? They may do it. No. So number one, I'll just, we gave the technicals on Delta, but JetBlue sprinted to 1750. But you backed off 55 cents on this. So that is pretty good pullback from the pre-market high. That 1750 high is supported by another daily high right at 1755 from February 21st. So I don't know. Let's see if we can even get back up to 1750. It was quickly faded. So I think that's a better chance at standing as the high of the day. And then above that, maybe you can work your ways toward 18. Seem to be finding buyers at like 1685, 1690 if you're looking for a little scalp here.
And Bev, I just want to talk this one for a second. It has slowly been leaking since they announced the Walmart stuff 2 days ago. We know it really got crazy, got up to $6.69. Closed basically at the high, 663. Yesterday pulled back. Today pulling back here again. Last night, just was disclosed that the CEO has sold some stock. And I don't want to paint it just like he was just selling. It looks like he sold some stock on April the 4th, but he also sold some stock yesterday on April the 9th. 150,000 shares look like the 4th, and then on the 9th, another 150,000 shares. So kind of selling, and obviously he sold, it looks like up in the 595 area there. So it kind of looks like he was fading the good Walmart news to a certain extent. Maybe he just needed some cash. I mean, there's multiple reasons, and Kramer's made this point before. You've got to take always with a grain of salt. You see somebody selling, a CEO selling. I mean, they might sell because maybe he's building a house, or maybe, he needs some cash. I don't know how many shares he owns. But, Kramer always says when you see a CEO buying, there's only one reason they buy the stock, because they want to make money with it. There's multiple reasons to sell. So maybe he was using it, maybe just needed to raise some cash, but interesting timing is all I'm going to say. You get the big pile from Walmart, and the CEO decides to sell 150,000 shares into it. So always a little bit of a red flag for me. That being said, I mean, it's holding up. It's 576 here now. I still thought a secondary was going to potentially be coming. Maybe it's not. I thought it would have came by now. Stock has pulled back, though. It's never good that it didn't hold the gains. We're almost a point below where we were, and you're talking basically 15% off the highs now. What are your thoughts here technically?
Oh man, this is giving a lot back here. Currently trading at 576, just above the pre-market low. pre-market low stands at 563. So you're right there right now. I guess 5.25 was the low on the day. Yeah, so that's what I'm looking. There's a little gap there down to $5. So I think you got a lot of shorts in here from 2 days ago. So I don't even know if you'll see 5.25 today. If you do, I look at that as support. And then you got the gap. The thing was trading under $5. So I don't think they're going to crush it off this. I think you're going to have a little bit more of a slow leak. And if you can't take out that pre-market low, boom, it could just turn around, maybe try and head back towards unchanged. Just a quick question here in the chat from, looks like Corollas. Is BIIB a good earnings play? And just quickly on that, biotechs move more on drug news than they do on earnings. So you got to look for those drug announcements because that baby can move off that. And
and that's random a lot of times too. Sometimes you don't know when that's happening. But I'll give you that. I think, there is bigger moves off of the actual drug news than there is on the reports. But Biogen's looking for something too. I mean, you had the disappointment after the Alzheimer's drug didn't work out. Obviously, the stock got killed. It's kind of trying to bounce back. But again, it can't seem to get into that gap area. I know it got there for a day. They were back on the 5th, but it kind of got rejected immediately there. A lot of overhead supply. It's not going to be just, we're going to fly through 250, 260, 270. So many people who are underwater because that was a random announcement. And anytime this gets a little bit back, it finds more sellers here again. So it's not going to be easy sailing. So even if it comes out, when do they report? So you're saying ahead of the earnings. When does Biogen do the report? Because I don't have them. I didn't look at the calendar for Biogen.
I have a confirmed date as April 24th.
It's coming.
That is
2 weeks.
Is it before or after the bell? Before the bell.
So 2 weeks here. Can you get a little run up ahead of it? Yeah, maybe. But even if they report good earnings, I don't think you're going to be like 270, 280, 290. It's going to be a tough go. So just because there's a lot of people who are burned in this, I still own this in my long-term portfolio. I still think long-term, if you're buying Biogen, that's why I still own it. I think if you're buying it and you're sticking this in your portfolio for the next 10 years, I think you'll be happy at 237. But I have no idea what the short-term path is going to look like, or even the next little while there. It's going to be dictated, obviously, going forward on new drug news and see how the earnings are. But the Alzheimer's was a big disappointment.
Can I just say, we'll hit going back to InBev for a second. According to the Form 4 filing, the CEO sold. His average selling price was $5.37. So he's not.
But
he didn't.
There was 2 sales though. It was April 4.
Yes.
So that was the sales from April 4.
No, that's his
average.
No, that's his average selling price of both sales.
Yeah, but on April the 4th, the thing was trading around 4. So he sold. It looked like 2 different dates. Did you see that? Because I looked at the form.
Yes.
Sold on 8. So I wasn't. So I said the April the 4th, and I was trying to say, I said I'm not painting it that he's just selling into. He sold some stock before that too. So he said April the 4th, he sold, and then he sold some more on April the 9th. So I was like, it's just interesting time in the second sale. I mean, if you're really, this is going to be huge for a company, this Walmart stuff, why are you selling it a day later? But I mean, it maybe there's other reasons. We said that. I said maybe he's building a house. Maybe he wants to buy a fancy car or something. Maybe, he's just rich and he has a ton of stock.
Right.
There could be other reasons. It's just always interesting when you see a stock have a big pop and then you see a CEO sale the next day.
I'm just saying he didn't sell at like 660. You know what I mean? Like
no.
Okay.
I never get.
And just want to clarify. I just want to clarify.
Yeah, but he's not a day trader. I mean, who's getting the highs? So he's selling that day. I mean, you got to be pretty. So if he's a professional trader, maybe even me, I've traded professionally 20 years. Rarely I'm ever going to sell the high. It's hard to do.
I'm just clarifying.
Especially if you're selling a bulk of stock. You're selling 150,000 shares. How many shares would have traded 660, Joel, in that bar? Not 150,000, probably.
One.
Well, there'd be some stocks, traded stock that day, but it's hard to time this just perfectly. I'm just saying it's interesting when he sells it the day after big.
I agree.
So that's all I'm saying. You make your own judgments, listeners there, but it's a red flag for me when I see a big CEO sell the day after big news. So, but maybe, he's just going to continue to sell. Maybe he's going to sell another 150,000 shares next week. Maybe he's just raising some cash right now. There could be other reasons, but I'm always just skeptical when I see that.
And I just want to just switch subject real quick. Spencer getting some love in the Google chat. Stargazer shorted we were talking about that LNN yesterday, and I had you scrounging for sympathy plays.
Yeah.
Well, Stargazer shorted AGCO off the LNN and is up some good money on some
Good.
puts.
Oh,
Yeah.
You know what?
Yep.
You're right, Spencer. Cat, deer, all got the beats yesterday. This Mr. Israel's getting good.
Let's just turn the
It's
show
coming.
over
just
to
information.
Spencer.
I'm buying Spencer Israel calls.
I was just complaining about him yesterday too.
You know what?
Not to my face, you were.
That's a good call, Spencer. Cat was down. Deer was down. AGCO was down. I mean, the S&Ps were down too, so we're gonna give you all the credit there. But they were down more. So good call, Mr. Israel.
It's just information. It's just information.
That's all trading is. Okay, it's a great segment. You know, all trading is trading the information that's publicly available to you. I mean, I do that all the time. You know, you see an analyst come out with a rating change, and I'm like, okay, well, typically the stock is going to move, you know, because it's in for new information coming in, so it's probably going to move up. And it all depends on, you know, how influential that analyst is. So it's digesting the new information. It's the same thing on earnings. It's digesting the new information available to you. I mean, really, day trading for the most part is just trading and digesting the new information. And how is it going to digest? Is it going to get to a level where it failed before? You know, all that incorporates into it all too. But really, that's just the technical information. All trading is you know, digesting the new information that has just came out on the stock.
By the way,
and
by the way, I should mention where I got the information. All I did, this is not rocket science. All I did was I went to quotes.benzinga.com and I typed in the ticker, and then I got related. And it's not 100% of the time.
Put that link
appropriate.
in the chat.
It's just quotes.benzinga.com. And
Quotes.benzinga.com.
Yeah,
I'm going there right now.
I mentioned
what do you
before.
do? Just type in the ticker.
Just type in the ticker, and it gets related companies. And you know, this isn't always 100%. You know, pure plays. They don't always, doesn't mean they move in sympathy all the time, but generally speaking, it finds related companies. So that's how I knew.
All right. So I just typed in LN and it says related companies right on. Sweet. Caterpillar, CAT, it was down yesterday. Deere, down yesterday. Again, the S&Ps were down yesterday. CNHI, bad day for that one. Look at all of them. AGCO, down. TEX, down. ALG, now maybe we're reaching. No, that was down too. ASTE is the other one here on the list, down. Oh, there's a little arrow. I can get even more companies here. CMCO was down. MTW bringing that up. Manitowoc had a bad. This is good. This could have worked for us yesterday, guys. So I like this. Quotes.benzinga.com for your sympathy plays.
And that works, you know, across the board. Even if you have no idea, but like we had no idea what LNN was yesterday. I didn't know what it is, but
I just added it to one of my favorites. There you go.
Look at that.
Quotes.benzinga.com. Look at this. Making money off Benzinga. There you go.
But it's all information.
Jump over.
It's all information.
Okay, so, and if you know, okay, let's just have fun with it. So we know these, but let's type in Delta and see what it gives us. So, because Delta is going to be moving today.
Oh, that's an easy one.
Lines. I just want to see what it. So yeah, so you got Delta, and it gives you LUV, UAL, AAL, gives you some China, ALK, JetBlue, Save. They're all there. So it looks like it works. I was just testing it. Looks like it works well. Good job, guys. Who developed? Whose idea was that one?
Some developer here. I don't know.
Good developer.
I'd give them credit if I knew who it was.
I think it's the week I spent on the development team.
Right.
Joel's gonna take credit for that one.
Yep.
Even though he never spent a week on the development team.
That's it. All right. What else do we got going on this morning?
Ratings grade. Let's talk. There's some big ones. Let's go to the House of Mouse first because we talked about it yesterday. We're talking about it again today. Back-to-back upgrades for Disney. Stock taking off here again this morning. It's BMO today. Stock trading up here in the pre-markets. Upgraded, outperformed. Price target 140 for Disney. DIS trading up here. Joel, thoughts of double upgrade?
Oh, I know. I was thinking about this one yesterday. It actually ripped through all the resistance that we thought we saw. And I was thinking about this one. I don't know who I was talking about it with. And they were looking at it in a short, and I'm like, I just wonder if, like, you know, you get the old bandwagon effect here, right? And sure enough, right back at it. Great day yesterday. You just traded up to 117.90. I see a couple highs here in the 118 handle, 118.46, and man, then you get up closer to 120.20. So I would just look at that 118.50 level as a potential target. And then I don't think that's the all-time high, but a high for a long time has been 120.20 here. So the double upgrade there does it. And boy, this is a big move for Disney. And man, if you're out in front of this one, good luck on the short side there.
Been running.
Yeah, yep.
It keeps running, and it's hot. You're going to say 120. And I'm not saying it's going there, but I'm saying this is going to be the stopping point, I would think. That's where you got up to back just over October. You got to 120.20. Going to be major resistance, another 2 points up. So, and if I go to the buck, you have some size at 118. There's 30,000 shares. A little more size at 119, 17,000 shares. At 120, 200,000 shares to sell at 120. So some institution lining up. So if for whatever reason it really gets excited here in the next day or two, I would probably be lightening up if it get close to 120, because I think that's where it could stall out, because that's where it stalled out before, and there is some institutional size up there. Now, it could take it out, but, and sometimes they take it out, and sometimes they sneak their head above it, which was probably what it did before when we went to 120.20. But at the same time, this is a big psychological level.
Yeah, yeah, I agree on that one. A nice move in the House of Mouse.
Gilead getting some love here.
Yeah, saw that too.
Long time since we saw a Gilead upgrade. UBS and Spencer maybe can go to the pro, and because I can't remember even talking about a Gilead upgrade in a long time. GILD is catching upgrade from UBS. Had an ugly day yesterday. A lot of stocks were weak yesterday. Is bouncing back nicely here this morning, up at 67. I'm going to say there's going to be major resistance up at 68 though, so I can't see coming into this one either.
January 3rd was the last time Oppenheimer. That was the last upgrade we had.
What did it do January the 3rd? Oh, but that was when the market really started exploding. So it's hard to. January was awesome for the market there. Obviously, we really came back. That was when we were getting Dow 500-point days. So it was a big day, January 3rd, and then it opened up the next day and had another 2.5-point move. So I don't see. I think if it gets up anywhere near 68, I think you got sellers all over the place. I'm actually probably a fader of the move up in the upper 67s.
Yeah, you're even struggling with your couple day high of 67.39. You sprinted just over that and pulled back. So first things first, let's take out that pre-market high. Then you see the 68 high. When was that? Boom. I'm not on my normal 68.07. Take a look at that area. Bumped its head up against 68 a few times in March as well. So I think I have agree on here. If it gets up to 68 should be good resistance. And yesterday's range, I mean, you closed down at 66.09. So I don't know if you're going to get to see the close there. But weekday yesterday, let's see if some traders use the upgrade here to sell into it.
Apple's interesting. This is an interesting technical setup, interesting rating. Gets downgraded to reduce at HSBC, so they are selling the pop here in Apple. The reason this is interesting is this was ridiculously strong again yesterday morning. Market was down. This ran straight up another 2 points. It felt like upside capitulation yesterday. It felt like, okay, we're going to stop out everybody, who is saying this isn't going above 200. You're going to get some believers buying it through 200. Now we're going to 210.
Yeah.
Those people are all caught. Stock closes below 200. Now you get a downgrade here. I think this is actually one I would go with. I'm still long Apple my long-term portfolio. Just saying short term, I think it needs a breather. I think you could see this at 195, and I'll even propose a bet to you. I think we see 195 before we see 204.
Nah, I'm not going to take that. I always like to take things on the downside here. No, good try though. Gap fill on this one. Yeah. I'm not on my normal platform, so you're gonna try and sneak something by me here. You did have the gap fill yesterday, and then the reversal. I mean, what a run in this thing! I mean, you wanted, earnings are not till the end of the month here, so yeah, I agree with that. You go with this one. Figure, oh man, there's a lot of different retracements you can figure, but let's see if we can take out the pre-market low. Pre-market low comes in at 197. It looks like 197 and change. So that's your pre-market low.
Do we have an 830 number?
Yeah, March CPI. We're moving?
Yeah, we're moving a bit.
What way?
At least we're chopping around a little bit there. Spencer, you got that number?
Yeah, core CPI for March, 2% year over year, 0.1% month over month, which was below the 0.2% estimate. So I don't know.
Not really moving. I mean,
No, we look like we popped a little bit there, and then just it looks like a couple points. It went wide. Like when I see the SPY goes wider, then I'm like, oh, I didn't even realize that. I should wake up because I didn't realize there was a CPI number coming out. But we're giving back a little bit here, just kind of chopping around a little bit. The market's trying to find its home, looking for direction. Where's the prof? Get the prof up there and see if he likes the number or doesn't like the number.
S&Ps did get a little pop. Now the fade seems like the sellers have stepped down from 2,900 to 2,890. Yesterday's intraday high 2,891, and your high for today is just right there too. It looks like 2,891.50. So nice area of resistance here. We'll see if 91.25 is the actual high, and a little bit of a fade here.
Go for the W, asking us about BABA. I still own BABA in the long-term portfolio. It has run. I mean, this has run. I have lightened up my BABA position. I lightened up way too early, though. I think I lightened up in like the 160s and 187. So I wish I would have held the whole position. Obviously, I was bought it, early January there when the stock was in the 140s. So it's been a good run for me in Alibaba. Wish I would have held the whole thing. I don't know what to say here. The one consideration is you've still got AABA that's dumping. So we know that they talked about, the Altaba, about obviously getting out of their BABA position. And AABA, you would think that would put some pressure on BABA shares, and it did for a couple of days. Now they've completely forgot about it. So AABA is going to maybe potentially get a better price than they thought they were going to get, because they were trying to get up on 177. If they're dumping the open market right now, they're able to get 187 right now. So it's going up in the face of that, which is good news. It looks like it's kind of consolidating from a technical perspective. It kind of looks like it wants to break out again. I just get nervous about the whole AABA. When are they going to start selling? If they've already started selling, because that's going to put some pressure on the stock. So that's the wild card. Just from a technical basis, though, starts getting 188, 189. I mean, it could open up, and this thing could eventually be $200 again. Incredible that we're talking about almost $200 on a BABA level when we started the year at $129. It's been an impressive year for Alibaba.
You do have a pre-market high of 187.89, and what is your high on the dailies? 187.34. Looks like that has been 187.34 marks the high of the move. So take it out. I mean, first things first, let's take out that pre-market high of 87.89 and then 190. But extended run up here, and it's funny, they hit the stock on the initial news on the alt BABA, but came back kind of like Disney when it got hit on the breakup the dilution of Fox. So sometimes those short-term reactions in the market could be good fading opportunities. Before we go to the break,
just before you change your subject here, Joel, JV Speck making a great point here. He's got his New York Open book open here, and he says there's size of 190, and I will say there's size every point here. 188 in the New York book, you got 80,000 shares to go. So that's your first point to try to get through. 80,000 shares, significant on $188 stock. Then at 189, you got another 47,000 shares. And yes, JV Speck, you're correct. Up at 190, I just saw over 100,000 shares up there as well. So some big sellers here in the book on BABA. Got to go through 188 first, and there's over 80,000 shares there. So take some money to get that through there.
And no coincidence that it stopped just under that in the pre-market. CPI posts biggest increase in 14 months. So woohoo! Interest rates going back up on the table once again. Let's just look at Twilio real quick. What a monster run to 136, trading 123 and change in the pre-market. I think you just got to keep an eye on the parallels under 120, 118.48 and 119.10. So really needs to hold those lows. I think you could do a quick slide to 110, but loved stock here. So that's a quick look at Twilio. Also, you can do a retracement if you think this could be a turning point. 136 to 118. Boom. What's that? A 16, 18 point move. 127, 128. You get back up there and pause. That could be negative for the stock. First things first, it's got to get back up there. Spencer, who's our 8:35 guest.
Ian Weiner, former sell-side analyst, former head of equity trading at Wedbush, now an advisor at Drexel Hamilton. So we'll be right back in a moment here with Ian Weiner. All right, welcome back, everyone. Pre-market prep. Spencer Israel, Joel Elconin, Dennis Dick, now joined by Ian Weiner, an advisor at Drexel Hamilton. Ian, how's it going this morning?
It's going great, guys. How are you?
It's going good here. Just having another great show today. Dennis, before we just came on, he said, Ian's back in the business here. So just real quick, we couldn't keep you away, and tell us a little bit about your role as an advisor at Drexel Hamilton.
Sure. Drexel Hamilton is the only 100% veteran-owned and operated investment bank, where over 50% of the employees are vets and 30% of them are service disabled. So it's a great opportunity to help out some veterans like myself, and to stay sort of on the periphery of Wall Street without getting too involved in the headaches that sort of were some of the impetus behind me leaving. But it's a good chance to kind of do something that's in line with where my values are.
All right, excellent. S&P's nice roll up here to 2,900, trying to bust through that resistance level, finding a few highs in that area. Anything in the market here that that makes you a little cautious at this level? Trade sentiment, and anything that investors maybe need to keep an eye on.
Yeah, I mean, I would say that the biggest concern that I have is just the exposure and sentiment of the market. I think when I was on here a couple of months ago, the Fed had just made that kind of abrupt about face, and we talked a little bit about how bullish that was. You had 70 billion in outflows from active funds at the end of the year last year. I'm pretty sure most of that has come back into the market, some of it into passive. But what I would say is that, there was probably a 50% chance of a China trade deal a couple of months ago. And I think now people are modeling almost 100% chance. And given all the commentary around interest rate cuts now from people in the Congress and executive branch, that to me shows you that people are set up for that as well. So the expectation now is you'll actually get rate cuts by the end of the year, at least the buy side expectation.
And President Trump echoed the sentiments, a week or so ago here, that the Fed should cut rates and start QE again, and the market would take off like a rocket ship. There was a lot of different, responses to that. One response is, well, if you do that, and then we really go into a recession, what bullets does the Fed have left? But you're kind of in agreement with him. Kind of break down your analysis of that statement.
Yeah, I mean, I think that the market has largely been driven by liquidity. If you strip out all the noise, you still have central bank balance sheets that are well over 22 trillion around the world. And if the Fed were to cut rates, at least in the near term, You're looking at a situation where there is no alternative mentality is going to drive people into risky assets. You're seeing that across the board. Pension funds are probably some of the biggest glaring examples of, guys going way out on the risk curve in order to meet obligations. But my sense is that you'll have people look at the stock market and just look to plow in the same way that they have been for the last 10 years, really.
Okay. All right. And but if we do turn negative though, and we're already wouldn't that signal to investors that things aren't as rosy as we think, and that create a little bit of panic on the downside if that happens?
Yeah, I mean, I think that if you were to just step back and forget about the Fed for a second and take a look at the economy globally, it's not that good. It's okay, but it's hard to say that the IMF just cut global growth rates. China, which is 20% of GDP now globally, is doing sort of okay at best. So, I mean, to me, it's a question of liquidity. And yes, if you were to sort of dip back into kind of recession territory, then yes, the Fed is just incrementally out of more bullets, unless they are willing to do QE, and then who knows what could happen.
I want to pivot here for a second, away from the Fed talk and just about the U.S. market. We're heading into earnings season here. We got the banks on Friday, or at least starting on Friday, and the next few weeks we're going to get a heavy flow of earnings reports. At a high level, we're coming off a pretty good earnings season. It wasn't amazing, and then expectations for growth this year or this quarter are quite low. So where do you expect, or how do you expect the chips to fall for the next 6 weeks or so as companies report their earnings for the first quarter?
So I think that you're going to continue to see people moving into sort of higher octane, riskier names in the sense that they're just higher multiples. I think the banks are going to remain depressed, at least from these levels, given the fact that interest rates continue to go lower, given the fact that brokerage businesses were a little bit weaker in Q1. Now you are starting to get some IPOs, but trading volumes themselves are not great. Volatility is completely depressed. So, if you look at those two aspects of banks' businesses, they're not particularly good. So I think if you're looking for longs, I think you're better off moving into assets or stocks where people are going to look at interest rates and say, well, you know what? Either they're going to be able to refinance their debt, or there's only a handful of really great growth stories out there, and those are the ones I got to still own.
Do you follow buybacks at all? I'm becoming more and more interested in just the sheer number of buybacks that have taken place in the past couple of years. I saw another one this morning. I think it was Turtle Beach with a $15 million buyback. I'm just kind of obsessed with just the sheer number of these corporate buybacks. Do you follow this issue at all, or are you keeping track of that?
I follow it because I think it's actually one of the reasons we're seeing such gross inequality from an income perspective in this country. You had companies buy back $1 trillion worth of stock last year, and that's money was sort of expected through this tax cut to be invested in either people or plants. And instead, it was used to buy back stock because companies clearly look at their investment opportunities, and that's the best case scenario. So it just goes to show, I think, companies' outlooks on economic growth, at least in the United States, because they opt to do that. And this doesn't even include the quote unquote synergies from M&A that you saw last year, which essentially means firing more people. So, to me, it's just further evidence that the big tax cut that was announced really hasn't done anything for the individual American and has done a lot more for sort of corporate earnings. So to me, it's a very important thing to watch, but but I look at it sort of even on a different level as far as what it means for, the overall society.
Just going back to the trade and the China trade, do you think that a deal is already baked into the market here, and once something comes down the pipeline, you just get a pop and a drop here? And also on that line, you had the Fed put for a long time. Don't you kind of feel like you kind of got like a China put in the market? But just overall a reaction in the market if and when we get a deal done.
Yeah, I think you're thinking about it the right way. It feels like a sell on the news, given that it's almost universally expected that we're going to have some kind of deal. I mean, clearly to me, the shock trade that would hurt the most people would be, one of these kind of storming off scenarios we saw in North Korea. But I think the issue with China, it goes a lot deeper. I think it's a question of what the actual real growth rate is. I'm pretty sure it's not 6% as advertised. Question is it 2.5? Is it 5.5? Because they're throwing a lot of stuff now all of a sudden at the economy again. So to me, that's the bigger part that people don't seem to be as focused on. But I agree with you that once you get a China trade deal, given the exposures that have gone back up and people are really long for this event, you will most likely see a reaction. We saw similar to when they came out of, I guess it was Argentina, with a similar sort of, we're going to get something done, and the market just cratered after that.
And just also, I mean, the mentality in the market kind of has been like, strength in the United States, buy the strength in the United States, while, Europe's in the doldrums, and, some of these emerging markets are making some moves here. But, how long can, this mantra hold up of like, sell the world and buy the U.S.?
Well, I think it can hold up so long as the Fed continues to support the market. I mean, if you look around the world, we are the country that has sort of the most transparency from a central bank perspective as far as what they're doing, and it's clearly dovish and tilting more dovish. And you like we talked about with buybacks, you have parts of the market that in different sort of tailwinds that make the U.S. a lot more attractive than other areas. And I think all in all, the U.S. Hasn't cracked yet. It's still, the economy's okay. It's not bad. It's okay, and some would argue it's good. So I think relative to kind of China, we just talked about Europe, which nobody really knows what's happening there. It looks pretty good. But again, it's all based to me on the Fed and rates.
All right, we've been on the line with Ian Weiner, advisor at Drexel Hamilton. Ian, as always, thanks for the time and have a good rest of the week.
Thanks, guys. Good luck out there.
All right, thank you.
Anything moving here? Is CPI numbers still causing some movement, or are we just?
We took a little dip to 83.50, but buyers have reemerged here. 28.86.75 is your last print. I think it's a pretty easy focus this morning. If you're just, basic things on the Standard & Poor's 500 index, you got that pre-market high right here at 91.25. You have the intraday high from yesterday, folks. And what I mean by intraday high is that the high that occurs in the S&P 500 index futures between 9:30 and 4:15. And sometimes it's, a distance away from the actual Globex high or low. But the intraday high, 28.91, that's your pre-market high, 91.25. So, boom, we got to get to that first in order to go up and test 2,900. Your pre-market low is right in the area of yesterday's low, Tuesday's low at 77.25. That's my big level on the downside. So, we're still holding up here. No major signs of a breakdown, but we just got to get through. We still got to get through 2,900.
Back to the ratings parade here, because there was a lot that we didn't get to. Actually, we got Nordstrom getting upgraded here. I believe it's at KeyBank. I can't read my own writing. I wrote it down this morning.
Yeah, this was after the bill yesterday.
Yeah,
I believe, and it was Nordstrom upgrade at KeyBank to overweight with a price target of $55.
We saw that big day for retail stocks like 3-4 days ago, and Macy's had the big breakout. Nordstrom had a good day that day. All the stocks gave it back. They didn't hold the gains for more than a day. So what are your thoughts here, Joel? When you see a stock, that has a nice move, like Macy's, pops up, and now basically 3 days later gives it all back. Is this like a chance to get back in? Is this like the chance, like, okay, we're getting a second chance at these levels? Or is it a tell that it couldn't hold the gains? It's just too much overhead supply, and that means eventually it's going lower. What are your thoughts?
I think so. I mean, when you can't, you want the 2 day move, right? And when the 2 or 3 day move doesn't, Yeah, it doesn't materialize. Macy's is just gets up near that $26 area. We were talking about this last week. It can't get in the gap from its last earnings report. So no, because in another, just from a technical perspective, when you do have those big pops and like, okay, this is retail's back, I'm buying into it, and then you give it back quickly. Then when you go back up to that area, like the next time Macy's tries to get over 26, some people are going to be saying, I'm not going to get caught in this again. I'm going to unload. So it's happened, quite a few times here in the retailers. You have that fake move, you sucker more people in, and then you create more overhead supply when it does try to rally.
Yeah, and here's the reason I'm asking, because again, Nordstrom getting upgraded here today, so you're basically suckering more people in. Buying here this morning actively was trading the 45 handle, starting to leak here already. But you get up there, I mean, I look at all these tops of 46. I think you're going to pay up a 45 for this thing. Could you get up to 46 again? Sure, but what's the risk reward here? I just don't see it blowing through those 46 highs. So you got maybe like 75 cents, 85 cents of upside if you're buying the lower 45s. And, it could just turn around and give it back here. So I almost feel like I'm a fader of this upgrade here from KeyBank.
Yep.
And this is just why we talk the ratings, because they move the price into a point where you can make a trading decision sometimes. And sometimes the analysts, when they're upgrading into a difficult trend, sometimes they give you an opportunity to short a stock or to sell a stock that you had maybe at a decent price. And in some cases, we like the upgrades. Sometimes we go with them. I'm still a big fan of the overall, what's it been doing for the last 3 months? Is the stock trending up? Is the stock trending down? Is the stock just kind of hanging out and doing nothing? I kind of like to buy downgrades on stocks that are trading up. And you got to put it in perspective too, like, because today I said that Apple, I actually would go with that one. You would say, well, that's counter to what you're saying with the Apple. But the only thing is, the Apple I felt was, it just moves so much. So now you get a downgrade here. It could put some pressure on just because it had moved up so much. So it's one thing to have an uptrend. It's another thing to be so strong that it actually almost felt like upside capitulation yesterday. I mean, a 2-day move for Apple, there was 7-8 points that moved in the last couple of days. Really, if you look at yesterday's high, I'm talking when it got up to 202.85 in such a short period of time, it almost feels like it needs a breather. And now you get a downgrade that's probably going to give it that breather. So I absolutely still like Apple long term. Absolutely, the trend is still your friend here, but I think when it's only down 50-60 cents here this morning, it still gives me a little bit of cautious, because I almost would have been fading it without the downgrade here today. I almost would have been looking to sell it, because I kind of felt like you got up over 200, suckered the people in, you got back to 200. That actually could, pull a 2-day move to the downside here, which would put us maybe back to the low that we were just at a couple days ago, say 196. So I think it could challenge that today, but maybe I'm wrong.
No, I mean, it's a good setup, and with the run that it's had, it makes sense. And also, and this is what I think we've been seeing a lot here. And on the way up, Apple got the upgrade, and then got kickstarted, then got the other upgrade. You're seeing the same thing in Disney here. So hey, what about one analyst? HSBC kind of bust with the trend here. Who knows? Someone else could come out tomorrow. So it's I keep an eye on that close from yesterday. It's trading in the red, but keep an eye on that. That will be the benchmark. And I think now, if you want to sell this thing, you're going to have to be selling it ahead of that high of the move from yesterday, 202.85, and that was nice that it filled the gap when on its way down. And this was even before the big earnings. I don't know what the noise was, but let's see what we can do with that closing price today.
And another stock, just while we're talking analyst ratings, we talked U.S. Steel yesterday at symbol X, and it had the big downgrade from Credit Suisse, and we were talking about it just hanging on that support. And here's another one we're saying, some people would say, oh, I'm going to buy it into the support, but we're saying it's kind of getting the running start at it. There's nothing beneath. So we talked about a slippery slope if it was to take out the 1876 low. If you shorted it going down through 1876, you took no heat. The stock went straight down all day yesterday. Basically, if you look at it at 1876, it never even popped a dime until you got down to 1850. Had a little pop there, but then continued to slide over the course of the morning. And, by the end of the day, the stock was down another point. So trying to buy a weak stock on a downgrade to sell is never usually a good idea because they can continue to wash people out. Took out that support, and we talked about potentially getting down to $17. I think it still has odds on the table. I don't know if it's going to get there today, but I mean, you're only 77 cents. I mean, it's up a little bit this morning, 94 cents, but I think all pops right now are going to be met with new sellers in US Steel because there's a lot of people underwater here. I know they were giving it love last night on Fast Money, and yeah, maybe at 17 you get a bounce, and I even actually wrote it on my sheet. It's interesting at 17, but I think at 17.90, I think you're early. I think you've come this far. Why not test the 17? Why not hit a few stops? Maybe go 16.85, take it out. The whole Jeremy Newsom reversal then maybe comes into play. But I think you've come this far. I feel like you're bound to test 17.
Going back to retail for a second, what about Under Armour here? Catching an upgrade from Citigroup to buy.
Who's upgrading it?
Citigroup upgrading Under Armour to buy. Price target raised from $23 to $29.
So this is interesting. I mean, you've got another retailer again catching upgrade. So multiple retailers getting upgraded here today, Nordstrom and Under Armour. I believe it was a resumption, though. I assumed it was an assume. So what that means is the analyst stopped covering it and then restarted covering it.
Okay.
All right.
So I've got it as an assume, but they're treating it like an upgrade. I mean, the stock is trading up here. So $20. I mean, the UA, if you're just looking at the UA, there's two obvious stocks, UAA and UA, whichever one you want to look at. If you're looking at UA, I would say major resistance up at 20. So if you're buying up at 19.10, you got some room to $20. But again, that's 90 cents. It's nothing to, to be, but there's so much overhead supply here again. It's the same issue as Nordstrom. UAA, same story, 21.22 here this morning. Gets up to 22, you got resistance. So you got 80 cents upside here against, a lot more downside in my opinion. So I'm almost like, I'd rather short this in the upper 21s, the UAA, as opposed to buy it in the upper 21s.
Okay, so do you want to hear a trading theory on Under Armour and Nike that I bet you no one else has on Wall Street?
What do you got?
I'm going to guess. Wait, I know what you're going to say.
Oh, you're going to get it, Spencer.
You're going to say whoever Zion Williamson signs with.
No, no, because isn't he going with Nike? Isn't it a slap deal that he's going with Nike? No. Give another guess. Something a little bit more current.
The Masters.
And something. Yep, there you go.
There.
What do you say?
The Masters.
So and obviously this. Who was it? It was a Spieth that had the big pop when he won it.
Yep. So I'd keep an eye on the leaderboard at the Masters.
Who's Under Armour got? Like who's their main guys?
Who do they have besides Spieth, Spencer? I don't know.
You're asking the wrong guy. I don't know.
Okay, because this all goes back to my Bubba Watson theory. Remember when Bubba Watson won the Masters and he was wearing that pink watch, and that stock went. It was a Fossil watch. It went to 139.20. Made that.
That was the high in Fossil too, by the way.
Yeah.
That was like the ultimate selling opportunity when the stock took off there, and that would have been we're going back a lot of years, but I remember that watch, and I remember them talking about it, Fossil getting some love. And what year would have that been?
I think it was 2012, so that was a long time ago.
Yeah.
He won the Masters in 2012, and he won it in 2014. And I know the all-time high was made in 2012 around that area, and then didn't have as much a reaction before. But keep an eye on the logo of the. I mean, of course, you can trade it today and tomorrow, but there's there's 2 more rounds on Saturday and Sunday, so pretty much have to make your wager. And it's just a correlation, something I've seen over the years. Nothing. Not back tested by any standards here.
It's definitely some to watch. I mean, when you get major something to watch as much as the Masters, the winner there can move the stocks themselves too. We saw it happen with Tiger Woods and Nike lots of times back in the day. Tiger Woods wins, and we would see Nike stock get a pop on that. So I mean, obviously it's been a while since Tiger has been as influential as he was, but you think like 10, 15 years ago when everything was about Tiger. I mean, Nike stock traded off Tiger Woods. So there's a good point being made there.
Yeah, just real quick, Roku here, double downgrade, just hanging in here, folks. 59.22, just hanging over the low from a few days ago. I just don't like that.
What's the
bar
double
down.
downgrade you're talking about?
Did it roll? This is like, was it Friday
It
and
was
Monday?
downgraded. I don't know if there was double one. I think Spencer said that, but it wasn't.
Okay,
There,
all right.
there
I
was two.
think that was a mistake.
There was
I don't
I
think
meant two. I meant two analysts,
Yes.
not a
Guggenheim,
double
yeah,
skip.
Guggenheim and Citi. Guggenheim and Citi.
Oh,
But
there was a couple downgrades. Okay.
over the past
Okay.
week, yes.
Over the
I
past
just-
week.
I just don't like the way it's sitting perched above that $59 level, and then the end
Oh
show
man,
here.
scary
Tesla.
below that. A good
Yeah,
point,
it
Joel. I
is.
mean, below
Yep.
58.35, I would not want to own this stock because you have a lot of air here. So that is scary. And these stock, we saw this happen, you know, and not that we know it's going to take it out here, but you just got to be aware when these big levels get taken out, it's all air below. Stocks can fall really quickly.
Okay, and Tesla just got a little pop there. I saw it was initiated at tomorrow with the 300 price target, but that was a while ago. Do you see any news on Tesla at all? Just got a little pop. No.
Oh wait,
Okay.
actually yes. U.S. senators are going to introduce a bill to expand an electric vehicle tax credit by 400,000 vehicles. It would benefit Tesla, GM, and GM by adding $7,000 to the tax credit for vehicles that are manufactured. So yes, there is some Tesla news that was out just at 9 a.m.
Yeah, just
Yeah.
breaking here. So you're just getting this news out here on Tesla now. And this is a big pop here for TSLA. This is trading active. This is trading wicked volume here right now. So,
Dennis, you wanted to mention First Solar too, because that could be a good mover too.
well, I'd like to keep talking Tesla here for a second. I mean, this is
Okay,
it's
sure.
nice when we get the breaking news. 156,000 shares. This thing's crazy right now. It's really active.
Whoa.
278. I mean, first stop 281 or 281.16. High
Yeah.
from 2 days ago. You see these things sometimes just get these wicked pops. They sometimes go right to old highs. So keep an eye, $2.50 up from here. Let's see what it does at 281. Gets above there, it gets interesting again. But resilience. I mean, there's been some bad news here for Tesla. Maybe this is some good news here a little bit this morning here. But it seems like this stock just finds a way. It finds a way to come back. And I don't know what it is, but there's just buyers that buy this thing on the dips. And here it was, a dip again, was bought once again. So I don't know where it's going from here. I still have a small position in the longer term portfolio, which I can't stomach. I'll probably sell it here, but TSLA it's resilient. We got to give it that.
And then the First Solar was an upgrade from Goldman Sachs, just to go full circle on that.
Just not an upgrade, but put on the conviction buy list.
Conviction buy.
So they were already a buy on it. They put it on the conviction buy list. And they put a price target up to $75. So that's why you've seen FSLR trade up significantly here in the pre-markets, up 4.5%.
All right. And on that note, that'll do it for today's show. Tomorrow's guest, a new guest. Well, I guess new. He hasn't been on our show in like 4 years or more. Ryan Dietrich is senior market strategist at LPL Financial. He will join the show tomorrow. If you missed any part of today's show, though, you can catch our podcast on iTunes, SoundCloud, Stitcher, TuneIn, and Google Podcasts, or just watch our show on YouTube again with the charts. Thanks to our guest today, Ian Weiner. Thanks to all of you in our chats. Please remember, all the information from our show is for informational purposes only and not meant to be investing advice. Hope you all have had a good morning. Hope you have a good rest of your day, and hope we see us again on Thursday.